Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bullish scenario where we have a finished three-wave corrective structure in an ABC and now look for continuation to the upside. In this case, we are then looking for a leading diagonal in the green wave 1, a 5-wave structure where all of the subwaves are three-wave structures. So now we are looking for a 3-wave move up in wave 3, before then a wave 4 and a wave 5. After we finish wave 1, we preferably like to see a bigger 3-wave retracement to the downside in wave 2, before then building a couple of lower degree 1-2s and lift off to new all-time highs. In this scenario, wave 3 has to take the high of wave 1, but preferably does not take out this level over here at 68.5k. That is a trend-based subextension taken from the low to the high of 1 to the low of wave 2. Preferably, your wave 3 is shorter than your wave 1, however, it is not an invalidation. The invalidation for this scenario is the low at 49k. A second bullish scenario is a continuation of this range. In this scenario, we have an unfinished 3-wave structure and only at a later stage expect continuation to the upside with prices moving above 65k. We are here working on a triangle inside wave Y. All of the waves have to be zigzag family structures as well. A 3-wave A, B, C, working on a wave D, eventually an E. Preferably your wave E also breaks the AC trend line, creating a bit of a fake out. Also preferably on a high amount of volume, before then moving back towards the upside, towards new all-time highs, and continue the bull market looking for higher prices. If we then go to the bearish scenario on the daily time frame, the bears are definitely struggling, and that is because of this move to the downside having a higher probability of being a 3-wave structure to the downside and not an impulse. If this was an impulse, a 5-wave move, 1, 2, 3, 4, 5, the probabilities were higher to move towards the downside, taking out 49k. But now that price created a 3-wave structure here, there is not really any bearish scenario that is really a great high probability scenario. Neither is the one that I have on the chart here, but the one that I show you now over here in the chart is arguably one of the higher probability scenarios. And you can see that in wave 1 or A, we then have an expanding diagonal. Now, an expanding diagonal is very rare, never preferred unless all of the other scenarios generally fail, but it is one of the remaining ones. Then we have a flat structure in a wave 2 or B, a 3-wave structure in A. Preferably, this move to the upside in A is labeled as a WXY. Therefore, this structure here cannot be a W for then a wave X and then a wave Y to the upside. We can only label this as a wave A. Then we are looking for a wave B to the downside and another C to the upside to take out 65 before then a dump and continuation to the downside. What also lowers the probabilities for this scenario, however, is that this structure to the downside counts better as a WXY double zigzag. However, a WXY is not allowed inside a wave W. There is of course always a slim chance that this somehow is an ABC, but if you would look especially at this range over here, it is very difficult to count this as an impulse as well as an ABC. But by all means, we can keep an eye on this scenario. And wave B most commonly goes to this area here in blue, the 1.236 to the 1.38 taken from the start to the end of wave A, giving you a target between 45.2 and 42.9k before then a move to the upside. Now, the most common structure in B is either a simple zigzag 535, but that doesn't really work anymore because of this move down, or a double zigzag, then being a WXY. So we then have to count a zigzag in W. However, if price would move towards the upside and touch the 0.7 Fibonacci taken from the start to the end of your W, sitting at 61.3k, the probabilities will significantly decrease for a double zigzag to the downside, and therefore it also decreases the probabilities for this flat in the bigger 2 or B. The invalidation for this scenario is a price taking out the all-time high at 73.8k, but as mentioned, if you hit the 0.7, probabilities go down, and also you actually don't want to see this high taken at 65k because you are looking for a wave B, which means wave B has to retrace at least 90% of wave A. So if you take a fib from the low to the high, toggle on the 0.9 sitting somewhere here, we haven't hit it so far. So officially we are not allowed to take this high, which also works as an invalidation. Now, if we look at the CVD divergences, then on the higher time frames, we have a buildup of bullish CVD divergences here. First of all, we have this one, a bigger bullish CVD with the target being 65k. Now, by itself, when price was moving down, this one is not very interesting. But because locally, price has been building bullish CVD divergences with bullish market structure, this one does become more important. And it is interesting to slowly start looking for potential scenarios where you do take out the high, like the bullish scenarios that I have shown in this video. A couple of examples of the past. Here we had multiple bullish CVD divergences as well. If I go to a 4-hour time frame, and you can see it more clearly, bullish CVD 1, number 2, number 3 with bullish market structure, continuous bullish CVDs, and eventually we got the break to the upside. Same here as well, number 1, number 2, and eventually number 3, and we move towards the upside. And there's more examples on the chart, both towards the upside as well, of course, towards the downside. But seeing this on the chart is definitely something I am aware of, and therefore it is something I take with me in the risk management of all my positions. If we then finally look at the probabilities of the different scenarios, then on the weekly time frame, probabilities are higher for the bulls, still looking for a continuation of the trend at some time. And on the daily time frame, probabilities are also higher for the bullish scenarios, where you do not break 49k, but instead either range sideways or move up to 65k plus. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.